Greetings everyone, Joseph James here with a newsletter brought to you by theschooloftrade.com. Today was August 19th, 2009. Today was Wacky Wednesday here in the market, and it was definitely wacky enough for us, that's for sure. Before we get into the trades we took today, I want to remind you guys about that free resource. Go to our YouTube page, /School of Trade, and when you're there, please rate and comment on those videos, guys. Let's take a look at our trade room totals. Now, we're trading 4 contracts here in the room this month. We made 120 bucks today, went 1 for 1. We called 2 trades in the room. I took one of them. 12 ticks total in that one winner. So put 120 bucks in my account today for today's total of 120. Our weekly total, of course, now creeping up there right at 180. And of course, our monthly total now here is 1725. Okay, so we're slowly making our way through here the month of August. We'll keep you guys posted. The term of the day today is scalping. Now, as you guys can imagine, scalping is one of those terms that a lot of traders learn, but they may not truly understand what scalping really is. Well, now scalping, technically speaking, is buying or selling of a security and then immediately buying or selling it back for a quick profit. Okay, so scalping, just like it sounds, we're going to be taking small profits out of the market all day long. It's also known as high volume trading, where we get in and out of the market quickly multiple times during the trading day. Now, a scalper will take anywhere from 5 to potentially 100, even more than 100 trades every day. So a scalper is going to be getting in and out of the market over and over again all day long, making small profits that will quickly add up to big profits later on in the day. Some good things about scalping is that it requires intense focus, which means you're going to be less likely to be making up trades or forcing trades, right? This intense focus that's required for scalpers is going to help you stay focused on your rule. There's less overall market exposure. Now, if you take a scalper compared to somebody who's going to be buying and holding for an entire day, you can, of course, assume that less time in the market means less market exposure. And, of course, it's going to be easier to obtain lots of smaller moves than one large move. You may want to take one trade to get 10 points or take 10 trades like a scalper to get 1 point each. And as you can imagine, it's a little bit easier to see 1 point moves than it is to see a big 10-point move. And of course, flexibility is key. As a scalper, you're going to be able to be very flexible to trade any market virtually any time you want. There's a couple things you want to keep an eye on, and of course, we'll go over that here in a second. Now, what do you need? What do you need to be a scalper? Well, the first thing you need is to get some sort of education. You need to know what you're doing first. So come join us as an advanced member. It's a lifetime membership here at the School of Trade, and we're going to give you everything you need, stops, targets, time frames, everything you need to trade as a scalper. You'll also want to have a well-funded account. And now the reason why you want to have a well-funded account is because you're going to be taking quite a few trades every day. So you need to have enough margin in that account to handle those trades. We also want to have a high-quality execution software. Now we use NinjaTrader here in the trade room, but there are lots of other high-quality execution softwares out there available. If you want more information about it, just simply contact us and we can give you the information you need. Most importantly, you want to have a lightning-fast internet connection and the lowest round turn commissions you can find. As you can imagine, trading high frequency like that, you're going to want to make sure you have a very fast connection. And if you're making potentially 100 trades a day, you're going to want to make sure you find the lowest commissions possible. Because commissions, obviously, they add up. At $5 a round turn for many of the contracts we trade, trading a 4-contract account means you're going to be spending 20 bucks every time you trade. So if you trade 100 times, that's a very expensive day. So make sure you have a very low round turn commission. And again, if you want more help with that, let us know. We'll point in the right direction. Also want to make sure the market you're trading is a highly liquid market, meaning that we're going to run into slippage problems if we're trying to scalp a market that is not liquid, right? If we have a thin market, not a lot of people participating, then we're going to see more likelihood of slippage, right? Meaning we're going to miss 1 or 2 ticks there because there won't be enough volume or liquidity in the market. And of course, also you need to have confidence in your entries because it's easy to get chopped up as a scalper, right? Scalping sounds easy. We take small profits over and over again. But what if we don't take small profits? What if we take a loss? Right? How we handle those losses is very important to being a scalper. Scalpers must be able to continue with their system with discipline, patience, and of course they have to do it with confidence even if they've taken some stops. So you've got to have confidence in your entries because it's easy to lose a couple trades here, get down yourself, and all of a sudden it's tough to get back into the rhythm as a scalper. So make sure you have good confidence in your trades. Last but not least, there are 3 types of scalpers. There are systematic scalpers. These, of course, are scalpers that use an automated system. A computer does all the trading for them. You have discretionary traders, right? Scalpers that use their own decisions, right? It's discretionary. These traders, they're going to make their own decisions in real time. And then, of course, kind of a subset of that discretionary is spread scalping. Spread scalping, very simply put, is where we're going to be capitalizing on the difference between the bid and the ask. So the spread, the difference between the bid and the ask, we can scalp the spread on a lot of markets by simply looking to get in and get out simply with the difference in the spread. And of course, there are lots of professional traders out there that make wonderful incomes doing all three of these. If you want more information about which of these three types of scalping techniques you should fall under, or what the differences are, and help you make the decision as far as which direction you want to go, come join us tomorrow morning in our live trade room. The beginner's course is highly recommended for all free trial members. We have 3 jobs, guys, when we open up our room: identify, adjust, and execute. And of course, come join us as a trial member or as a lifetime member. We'll trade the European session at 3 a.m. We'll trade the pre-market at 8 o'clock. We'll trade the U.S. Open at 9:30, and we'll finish up at about 12 noontime. Now let's talk about some of the trades we took today. Now here in the Euro, I wanted to use this example in the Euro here as a great example of how we run our room. As you guys know, today was a very slow day. Pretty much every day here in the month of August is slow, comparably speaking. But we never fail at qualifying, reviewing our rules, and making sure that each one of our guests and our members are aware of why each move was taken or not taken. So even though we didn't take any trades in the Euro today, as you can see, we definitely spent a good amount of time looking for those trades. Whether it be wave patterns or two-step patterns, we have specific rules that we follow, and we go over these rules live in real time right in front of you. That way you can learn this stuff in real time, seeing why we choose to take trades, why we choose not to take trades, and everything in between. It's a fantastic learning experience, guys, so come join us. Now, 2 of the trades that we called live here in the room today, this first trade I took at 9 o'clock. Now, as you guys know, this is in the crude oil. I took 1 trade today on crude oil, called about half dozen higher risk trades. Our members actually made some pretty good money today. A lot of our guests made some pretty good money today. So make sure you come out tomorrow and I'll show you how you can get involved with low risk, moderate risk, and high risk trading opportunities. So of course, in the summertime months, we see more high risk opportunities because we see a lot of this choppy, sloppy, low volume trading. But come the fall, once we get past September, the first week there in September, past Labor Day, we're going to see a lot of these high-risk trades will start disappearing, and they'll be replaced with low-risk trades. When the price is moving, we see a lot more potential for opportunities to trade. But as you guys know, we go through every single trade, step by step, qualifying each one. This trade here at 9 o'clock on the crude, a 2-step long. Entry here was at 28. We, of course, had to make it first past a couple levels of resistance overhead. We got filled at 28 there. We took profit at 3, 6, and then scratched out for a total of 12 ticks. We're taking 2 contracts off of the first, 1 contract off the second, and of course the runner got scratched out at our point of entry for a total of 12 ticks there. Moving forward, the next trade here happening just before 10:30, right? 10:21, 10:22. This, of course, another 2-step here called live in the room. This one was called live as a high risk trade. Now, if you guys are unfamiliar how we call the trades live, we call them live. We tell you what the level of risk is, if it's a low risk, a moderate risk, or a high risk. And what I wanted to show you guys, this is a great example of how I told everybody in the room this morning, right? We had a high risk long here at 22. So everyone knew exactly where we were getting in. We had to break above these 3 levels of resistance here, these blue lines you guys can see here. Once we broke above that, we were good to go at the 22 entry. So we announced exactly where we're going to get in. And a lot of our members, of course, and our guests took this trade. This trade was good for 3 ticks, 6 ticks, and then 2 ticks. So a total of 14 ticks there. 3-tick target, 6-tick target, and then we trailed our stop to lock in 2 more ticks as this price came right back down against us. So 14 ticks there total on that high risk trade. You're going to be exposed to lots of different levels of risk here in the market, and you can of course pick and choose based upon your trading risk tolerance, your personality, how you want to be a trader, right? What your goals are, and you can choose which trades you want to take and which trades you don't. And of course, I'll be there every step of the way to go over each one with you and answer questions when you have them. Once again, guys, my name is Joseph James. I want to thank you guys for taking your time out of your day for us today. The trade room opens tomorrow at 2:45 a.m. I want to remind you we have a free webinar tomorrow at 11:30 a.m. Eastern Time, Tuesdays and Thursdays. Come out and join us, guys. We'll give you free 3 weeks as part of our trial. You'll see the market in a completely different way. The beginner's course is highly recommended for all free trial members. Send us an email for more information about lifetime membership at sales@schooloftrade.com. My name is Joseph James. Thanks again for your time. We'll see you in the room tomorrow. Bye-bye for now.